Mastercard came out with earnings this morning and beat both on revenue slightly and earnings per share. Now, there's a chance that Mastercard can go all the way up to $1,000 from where it is now. I'm going to break that down by covering not only the company financials, growth prospects, but also talking about the really important macroeconomic landscape and conditions. So you don't want to miss that, so we can understand why there's a lot of growth potential for Mastercard in the near future. Let's break down Mastercard's key financial variables before we take a look at the chart, and most importantly, break down very important macroeconomic variables to put the pieces all together about that upside growth to potentially $1,000 per share. So over the past 12 months, revenue has expanded 13% at $25 billion. That's great. That shows a lot of great growth. And additionally to that, a very strong net profit margin at $11 billion for $25 billion in revenue. That's a very healthy margin. We like to see that. And in cash on hand, although it's lower than some other companies, $9 billion does show that even if there wasn't a lot of net income coming in, which net income has been very consistent for Mastercard, there is cash on hand to service debts or other kind of expansion opportunities. Now, taking a look at the stock chart for Mastercard versus the S&P 500 over the past 365 days, we've seen very similar performance, basically around the same growth over that time period, not as much volatility either. This is great, as I'll talk about the macroeconomic landscape to see not only how Mastercard will fare in 2024, but also beyond. So you want to make sure you stick around for that. But this, in general, is a very strong chart for Mastercard, at the least, that you'll have more security in the short term. Now let's talk about key macro variables. First, money supply growth. This leads to inflation, and it's down 1.7% year over year. This is good for keeping inflation down, because this means that the inflationary pressure isn't building. Next, current levels of inflation are up 3.8% year over year. This number is higher than desired, and I'll talk about how that impacts monetary policy in a moment. Continued unemployment claims. This metric measures rising unemployment. Continued unemployment claims are up 35% from the economic cycle low, which occurred in June of 2022. This number is very high and means that a recession is likely to occur within the next year because the economy is weak and prone to any kind of shocks. And as we know, there's a lot of things that could be shocks happening both domestically and in the geopolitical arena. Next, the market discount cycle. The market discount cycle is every 3 to 4 years the market performs poorly due to an alignment of fiscal and monetary policy with the political cycle to either address rising inflationary pressure or allow for rising unemployment rates. Right now, we stand at year 2 in the market discount cycle. Even though a recession is possible, the discount cycle dictates that it's not likely that coordinated actions will be taken that impact the stock market negatively. Now, moving ahead, we see that the major cycle has some red here. Now, what is the major cycle? This is when major world-changing domestic and international conflicts follow a cycle, a predictable one, that begins every 84 and 248 years. Based on where we are right now, we are at year 83 of 84 in the 84-year cycle and year 248 of the major 248-year cycle, which means we are about to enter a major conflict period. A little bit more about that. The major conflict cycle means that wildcard events can occur in the stock market that have not happened in recent history, right? If you thought about 2008 being kind of a wild card, this is more of a bigger wild card picture. Then moving ahead, the S&P 500 valuation, the stock market is currently overvalued, which means that it's poised for a big drop when the market discount cycle commences. So that's coming down the road soon, but again, we're at year 2. And then finally, rounding out the bases, monetary policy. Currently, it's favorable to the stock market, and interest rates should continue to remain about the same, if not decreasing before the end of the year. And fiscal policy is favorable to the stock market as well due to high levels of government spending. Before I give my prediction on Mastercard, if you want to learn about the key cycles that drive the stock market and get stock rankings so you can find the very best opportunities, make sure to go ahead and click the button down below. Now here's the deal with Mastercard. Financially, the company is very sound with strong net income ratio to revenue and also a decent amount of cash on hand, so that's a great thing. Growth prospects, this is the big one. So in the event that we're going to see a lot of craziness moving into 2025, 2026, 2027, and beyond, Mastercard actually becomes more of a consumer staple in an inflationary environment. So from a pure growth of revenue standpoint and moving debt over into credit card debt, then there's a tremendous amount of opportunity for not only top line growth, but also bottom line growth as well. So growth prospects are very good there. From the macroeconomic environment, right now we are in a favorable environment for all types of well-performing stocks and into a situation in the future where we could see a dislocation towards consumer staples, and Mastercard would likely fall into that camp as well. So from that perspective, things are looking very good. Now in the long term, also another very strong signal in terms of being a consumer staple in a inflationary or uncertain environment as people use debt. So that's another positive for long-term potential, and in the short term, Mastercard should continue to perform around what the S&P 500 is doing. Probably won't outperform like some of the other growth names, but at the very least, the company should be able to maintain less volatility, less beta than some other growth names, while still owning more upside than the S&P 500, moving into some of those more chaotic events down the road. That's all. Make sure to subscribe to the channel, and I'll see you on the next video.